DJI Tribe? Welcome back. It's another weekend here on a Friday. Really great summary to the week. We've had some interesting earnings that have been posted this week. I want to definitely cover some important stuff today. I hope you guys are having a great day. And as usual, thanks for tuning into the stream. Good morning, everybody. What's up? What's up? Mark, hi. I'm CN. What's up? Ryan, Aaron, good morning, guys. Welcome, welcome. So, in the news, one thing that I got to mention is that COVID cases are on the rise again, okay? I'm not just talking India. I'm talking pretty much globally. This might set off another scare. It could possibly set off a cascade of a correction. It could. I don't know if it will happen, but it could. In Singapore as well, we're seeing a rise in cases. It might be one of those like fake outs, but then I'm sure that, you know, governments are going to react and do things to curb these, increase in cases once again, and that may cause another situation where lockdowns are delayed. Now, I know vaccine rollouts are happening, this, that, but remember something, even if you receive the vaccine, you can still be carrying the virus. This is the reality of the situation right now. In Singapore, there was a case recently where there was a nurse who was vaccinated, but she still was tested positive for COVID. And so, you know, it's becoming quite a interesting situation as we develop forward here. We don't know how this is going to pan out or when this thing is going to end, but it can get messy, okay? Especially after the S&P 500 hit record highs just, 2 days ago, reaching that 420 level, and now we're seeing a little bit of a corrective pullback, and we may see a retest of the 4120 level once again. These levels still remain support levels for the S&P 500. Of course, there's another dual zone right here at 4180, let's just call it. So about 9 points below where we are on the S&P 500 seems to be a very interim support here. We have found support at this point twice so far. We could find it a third time here, and that could be a major support that if we break through will cause a cascade down to the 4120s. So watch that closely. I don't feel comfortable taking any bullish positions right now. No bullish positions except for positions in possibly energy and in financials, which are all not looking that great to take today neither, okay? So you have to be extremely cautious trading this next 1 to 2 weeks. We're setting up for another corrective wave down after a massive corrective wave up, okay? So be careful of that. Don't get caught in the blitz, and exercise caution. If you haven't hedged, good time to hedge, right? Good time to hedge, okay? This is a great time to hedge. So let's have a look at the news real quick. India COVID crisis threatens world pandemic recovery, blah, blah, blah. Okay, airlines add flights out of ravaged India, bring citizens home. India vaccine, da, 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 da. Okay, US futures drop. Pause for growth rally. Okay. All right, not much here. We'll have a look at the Wall Street Journal. Barclays profit surges, but higher cost weigh on performance. Rally in transportation stock nears 122-year-old record streak. This is the time when all defensive portfolios do well, I would say. If you're holding defensive stocks, this is the time. In fact, I would say this is actually a really great time to go long utilities, to go long any defensive stock for the time being, just a short period of time. If we get a drop, if you don't want your capital gains to erode, it's a good time to take defensive positions, in my opinion, okay? And that's your, consumer defensives, or it could be utilities. Those would be my picks, specifically. Okay, not much else on this. We're going to be going through earnings reports today, guys, most of them. But right before that, I want to bring a couple of things in front of your eyeballs, which are very, very important. First things first, Charles Schwab insiders continue to sell. Facebook, Mark Zuckerberg continues to sell shares. What else? Let's see. Yeah, okay, those two, that's it. Apart from that, the rest we already covered in the previous live stream. Yeah, okay. Treasury yields are back up again, signaling increased pressure on the market. As I mentioned, we are looking for this to kind of peak out at the 2.0 level for the yield. 1.8, 1.9 seems like a very, very good interim. Now, what's important here, which I haven't showed you guys for a while, and I've been keeping track of it, is the S&P 500 dividend yield. Remember what we talked about, and remember what we always say about this, right? When the S&P 500 dividend yield, right, is so weak, and bond yields start to climb, what happens? People start to jump over to risk-free assets instead of holding the S&P 500, and that's when you get a real dump. Okay, that's when you get a real dump in the stock market. And we're seeing March numbers were 1.45%. And since the price of the S&P 500 has been heading higher, what does that mean? That means the dividend yields are going to go lower. So we're going to actually go lower than 1.45 this in the month of April, which will come out by Monday. We'll have those numbers, right? And I'll show you what I mean. On the 3rd, you'll have the numbers for this month for the dividend yield. And when the S&P 500 dividend yield comes out, and today is the last day of April, so more than likely people will know what the number is, right? We will see a lower yield again. And you can see since the last year, from the same period, right, March to March, 1 year, compare the S&P 500 dividend yield. It's almost reaching 0.5% less, okay? And so markets are not going to react to this favorably. I can guarantee you that the yield is going to be closer to the 1.3s in this April, right? Unless some miraculous thing happens, because I don't think that many companies, except for the big tech or the bigger companies, perform well, right? And even so, even when they perform well, the yields are not going to climb that much, okay? Because prices are so high and yields are calculated based on price, the yields are going to drop. And when the yields drop, that's going to be a signal for people to start dumping the S&P 500 and start picking up the bonds, okay? Now, granted that the bonds are not at a very, favorable level right now, people will still chase yields eventually, okay? So keep that in mind. We are setting up for a possible fall here. We are, really. It is a real possibility. I'm not talking about a crazy, 30% fall. I'm talking about a nominal correction, right? A nominal correction on this uptrend, something where we can head down further, test the 4120 again, or test the 4090 again. There is a possibility, okay, that we get one of those falls, like a 3%, 5% kind of a drop. So don't chase the stocks right now. Yes, they just reported earnings. Some of them did extremely well, but you will get your opportunity to purchase these at a discount, okay? The only things that you should be looking at right now are your Chinese emerging markets, which will be more attractive during this time, right? So that's something that we should be looking at, right? And even these, you might get a better deal. If the market falls further, this is going to fall as well, because some of these companies are listed on the S&P 500, okay? But good time to pick up some of the Chinese ETFs here, like KWEB, or if you wanted ASHR, that's another one. This is the mainland China ETF, right? They're all decently priced here to pick them up. They're all trading at a discount valuation, and I hope that you will diversify your portfolio into Chinese equities a little bit, because that's something that people will not be looking at now, and then the end of the year you'll see what I mean, right? Because China's going to be recovering much more quicker than the rest of the world, right? Okay, so that's something that I want to mention, and I mentioned it now. So pre-market movers here: Dow Jones, everything red. Apple, Microsoft, Chevron, Intel, everything's red. Everything is red, right? Twitter is down 12% after lackluster earnings. Amazon's the only one that's green on a very good beat. I reviewed the report. It was a great beat. And we'll be going through it in a second here. So we also have, let's see, economic calendar for today. Core PCE, personal income month over month is headed a little higher, which is good. Drop market is kind of recovering a little bit here. And then we have employment costs, PCE price index, okay, core PCE as well. And then a bunch of companies reported earnings today. Wind will be reporting after the bell. Okay, great. So majority of the big companies are reporting. I think more than 50% of S&P 500 has reported already. Let's see here. Western Digital up 4%. Amazon, yep. Okay, Twitter down, the biggest loser today. Twitter. And all right, cool. And in other news, for those of you who are watching and have yet to take our technical analysis course, I just wanted to give you guys a quick shout out and remind you that this is the last few days to sign up for the TA course until next month. Okay, we will not be holding this course until another month, and I'm not sure when I'm going to be holding it. I think it might be at the end of May, more than likely. If you wanted to take the TA course, or actually, I don't know if I'm going to be holding a TA course next month. To be honest, I might be holding a different course next month. I might hold the advanced course. That might be something that I'll do next month. And so if you wanted to sign up for the TA course, this is the right time to do it. Click on the link that is pinned in our chat. Go enroll today if you want to. And we hope to see you in class on Monday. It will be a 6-day course. So you're going to do Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, because the curriculum's very, very broad. Just to go through really quickly with you guys once again, it's a very, very comprehensive curriculum. We're going to do market structures, candlestick patterns, deep dives, buyer, seller, supply, demand, psychology of day trading, also top-down analysis. We'll be going through risk and reward management for small and large accounts, trends and wave patterns, level 2 data, how to use level 2 data, trend validation, reading the tape in level 2 data, reversal pattern strategies, breakout versus fake out patterns, sector rotations, and market fundamentals. And then I'll be teaching you guys about Fibonacci extensions and retracements, trading breakout patterns, wedges, pennants, channels, doubles, double top, bottom, head and shoulders, and cup and handles. And then on Thursday, we'll be going over scalping, day trading, swing trading, using everything that you've learned from Monday, Tuesday, Wednesday, stop losses and mental discipline, using data from options flow, which we have on our Discord server. And then on Friday, I'll be going through indicators with you guys, moving averages, RSI, weave up, OBV, volume profiles. How do you use these indicators properly? What are they, etc. Managing stop losses on Saturday. Pre-market checklist, what you should do before the market opens. What is my system? Building a watch list, how do you do so? How do you come up with the comprehensive watch list system? And then market breadth, interest rates and the market. And then an introduction to our Discord community. And these courses come with 2 live trading sessions, a free trading journal, one-on-one mentorship if you require it, live Q&As, and then our indicator setup, plus lifetime access to the recorded class sessions, which will be sent to you every single day. So this is the last chance to sign up for this course. If you wanted to be a part of it, please go to our website and sign up today. Do not wait till the weekend is over. All right, I will see you guys if I see you guys. Very red today, very, very red. And all right, let me answer some of your questions right before I do these breakdowns on the reports, which shouldn't, I'm going to go through 5 minutes on each one of them very briefly to tell you guys what I'm looking at. Amazon high 3660. How high do you think Amazon can go today? It's at 355. Okay, with Amazon, I just want to point out something here. Our intrinsic valuation, EGA's intrinsic valuation, is at 3785. That also lines up with the 61.8 Fibonacci extension, which is a really weird coincidence. We did this valuation in January, and I think if Amazon can break through all of these, then we may see it go up there. But I seriously don't think, we will be going up so quickly to that level. I think that we will see maybe an extension to the 3567, and then, a come back down, and then another up, and then another down, and then eventually, moving up higher and higher. It's going to be very hard in this environment where PE ratios and market valuations are so high for us to hit all-time high valuations, which will see us just moon irrationally. Okay, remember, a cycle of bad news is what it takes for us to take the elevator down, even though we've been taking the staircase up for a heck of a long time. People chase yields. Yep. Can you explain what the recent surge in commodities could mean? Are you talking about oil in specific, or are you talking about gold, or what commodities are you talking about specifically? Gold is looking extremely bullish here, by the way. I spoke about this before. I already have an alert set up here. Once gold breaks out the 168 here, I will be taking gold to the upside to bet. get these likes up. Thank you. Yes, please, if you can, like the stream. Smash the like button, guys. I really, truly appreciate it. I appreciate each and every one of you for being here, first of all. Good morning. GM, Uber. T, I cannot stand this market. Can we go back to 2020? Lol, hedging is hard too. Yeah, yeah, it definitely is a tough market to be in. As I mentioned, this is one of the reasons why I'm not trading actively right now. Right now, I have majority of my money in passive investments. I have a VIX position for July, which I'm holding, a debit spread. And I'm just continuing to add long-term positions in equities that are undervalued. As simple as that. And that's what's important to me. I specifically will be looking at the bright spots that I think are undervalued, and that should be your emphasis. Remember, sometimes the market doesn't give you the opportunities to trade actively. It just doesn't. And this is where I find that having the background in fundamental analysis and having a background in being a patient trader where you wait for opportunities to come to you pays off big time. It's not necessary that you always have to trade, which is something that I tell the team on the Discord all the time. Just wait for the opportunities to come to you. There will be an opportunity for you to buy the dip, but now is not that opportunity, right? So when things like this happen, go outside, go enjoy your life. There are many other things to do apart from trading and forcing trades out of boredom, right? And waiting for something to come down, and you're like, oh, is this the time where you should buy the dip? And then you buy the dip, and then it dips more, and then you buy the dip again, and it dips more, and you buy the dip. This is the classical thing that people always mistake themselves on. Also, the other thing that you should be doing right now is starting to exit some positions to raise cash and hold some cash. About 30% of my portfolio is in cash right now, okay? About 30%. So I recommend you guys to hold some cash. You really don't want to be in a position where the market dips and you don't have money to buy the dips, okay? So keep that in mind, guys. Market's always going to have fluctuations. And I don't think that this year we're going to see double-digit growth on the S&P 500, right? I have already mentioned this at the start of the year. And so if we look at how much this year has grown since January, right? Okay, let's look at it real quick. Since January, how much are we up so far? Okay, here we go. Since January, this is January. Right? The market is already up 13%. Okay? The market's up 13%. Now, if we go higher than this right now, what does it mean? We're going to have double-digit growth this year, right? And it was double-digit growth last year and the year prior to that. And we know that the S&P 500 long-term, CAGR is closer to about 9 to 10%. Now, if you tell me that in 3 years, specifically, cascading 3 years, year over year, after a COVID crisis, we will see 3 years of 20% growth, which is what will happen if we continue to head higher here, then I would say that's being a little unrealistic. I think that this is the year, rightfully so, that we should have a single-digit growth, right? And if that happens, well and good, right? I'm not trying to say this to scare you guys or something. I'm just being realistic about it in terms of probability and statistics, right? And so this year we're already up 13%. Yeah, okay, we can go higher, right? Let's see. If we wanted to really take this higher and get another 20-something% growth this year, let's see where the S&P 500 has to end, right? If we want a 20% growth, the S&P 500 has to come to 4,400, okay? Much higher than where we are right now, right? And we can't get up there without having a corrective wave, right? Just be realistic with your outcomes, guys, okay? Look, impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive, mini corrective. What do you want? Another impulsive like this? No, right? Probably not, right? Okay, maybe we'll see a little push here, try to trap some bulls, and then come back down, right? Back to the 50 EMA, something like that, right? At the 4,000s. And then maybe another wave up, right? And then end the year somewhere around here, right? We will probably end the year somewhere in this region, right? So I don't think that having a 20% target on the S&P 500 this year is a realistic view, in my opinion. I think that we that would be really pushing it. Okay, that would be really pushing it. Until and unless we have some technological advances, some crazy news comes out that somebody developed a vaccine that's, gonna eliminate this thing altogether, which, I don't think it's gonna happen. Okay, this thing is gonna take a while to recover, and yeah, that will be the reality of the situation. So use logic and use reasoning when it comes to these things. Look at the 4-hour chart in the S&P 500. Does it look to you like it's losing momentum? This was pretty steep, right? The second wave is getting a little less steep, right? The third wave is probably going to lose a little bit of steam, and then we're probably going to see one of these, and then a sideways consolidation, and then another wave up. Okay, so this run that you saw in April, May, yeah, that was a good run. Okay, now you need to start thinking about how you're going to keep these gains. The only way you're going to do that is stay hedged. All right, great. I hope that makes sense. If that made sense, go ahead and write something in the comments. Tell me what are the struggles that you're facing right now. What are some things like Ryan was saying, I can't stand this, hedging is hard too. Yeah, I completely get it, man. I really do appreciate you even being honest, because it is a difficult market to trade within. Okay, what's important is you take logic-based approach rather than emotional-based approach. Remember that. Okay, let's smash these earnings reports. Don't have much time here. I'm gonna try and do them as quickly as possible. So I'm just gonna go through the summaries, and that should be plenty. So, how are you hedging your Chinese positions? Well, once I see the market give me a signal that the Qs are starting to reverse, which the Qs are having a tough time to break out here, what I'm going to be doing is taking a bearish position on the Qs, because majority of Chinese companies are listed on the NASDAQ, and I will be taking that as a direct hedge to the downside. So that's the plan for hedging against Chinese positions. For the rest of my portfolio, which is heavy on S&P 500, I have the VIX hedged against that. So you gotta know what kind of positions you're holding and how to hedge against them. There are different flavors for every different type of hedge, right? Okay, very quickly, Amazon reported earnings, I think yesterday. So operating cash flow increased 69%, which was a mammoth increase. When we talk about operating cash flow, we're talking about EBITDA. Beautiful increase there compared year over year for the trailing 12 months. Think about it, a year ago they were at 39 billion, and this year they've increased cash flow by 67 billion. Free cash flow increased to 26 billion, which was a little bit better increase than the previous year as well. Compared was 24 billion the last 12 months. And then you have different types of free cash flow as well. Less principal repayments for finances, lease, and financial obligations. Less equipment, and then other stuff as well. What's important is that Amazon is a profitable business and is still continuing to accumulate good cash flows. This is what we want to see in a company that has an economic moat that is intact. Okay. And then they have been effectively managing dilution as well. So, issuing shares as rewards effectively, not diluting their shares too crazy. Net sales increased 44% year over year. Very beautiful beat there. And an operating income increased 8.9 billion. This was important. This was the most important thing. Okay. Amazon has had a very tough decision, because it is a company that sacrifices short-term profits for long-term growth. You need to understand. This is the reason why I'm very bullish on Amazon, and why I always have been bullish on Amazon, and why its valuation is so sky high for me. Specifically for me, my valuation is at 3,785, because this business sacrifices shorter-term cash flow for longer-term sustainability. Okay. Then you can go and read all the rest of this stuff, which is very important as well. But I think the most important part of it was AWS. And so I would urge you to go and read this, to go and read who their partners are, etc., etc. They also managed to grow, cash flows from AWS. And then on top of that, they had good guidance for the second quarter, above expectation. Okay. So they're expecting net sales to be between 110 and 116, and I think analysts were expecting 105, 110, something like that. I'm not sure. Something along those lines, okay? And partly in between, because of a favorable impact of FX exchange rates as well. So this was something that that was notable, okay? Okay, so Amazon with a very nice beat, in my opinion. The main thing that we always look for in the Amazon earnings report is operating income, and then free cash flows and how it's growing organically. And so far, it's been beautiful. Okay, those were the main things for me specifically. And then seeing AWS continue to grow, that was like an icing on the cake. That's the main things that I look for. All right. In terms of business valuation, this company is still doing extremely well, and I don't think that it will slow down anytime soon. All right. Now Microsoft, this one was a bit of a head scratcher, and productivity in business is up 15%. Intelligent cloud up. All of their business segments are actually doing substantially well. And remember, we look at the GAAP numbers. I don't really specifically look at non-GAAP, but then you can see there's not much of a difference. There are some differences, but not entirely much. We always look at GAAP because this is the generally accepted accounting principles. This is governing accounting methods, and as financial analysts, we always look at the GAAP numbers because that's more. It's just a different reporting method, right? It's consistent with the accepted accounting principles. Remember that companies can report both GAAP and non-GAAP. Like for example, Tesla always reports non-GAAP, right? And then their GAAP is usually hidden somewhere very far away in another, part of their report, like in the 10K or the 10Q. Okay, and that's because Tesla needs to do a lot of creative accounting to get their investors invested, right? Okay, then we have also, what was the main thing here that we wanted to see was cloud growth, right? And you can see cloud growth has been increasing year over year, which is another great thing. That was the main thing for me, actually. Cloud growth, right? And we can see 2020 versus 2021, this is Q3, Q4, and then we continue to grow cloud Azure here, and now we're at 17 billion. Now, it wasn't such big of a beat as we expected, but still a pretty damn good beat, okay? And then they still have commercial bookings of about 39%, which is a great growth, okay? So you can see consistent execution across our core annuity sale motions, increase in number of larger long-term Azure contracts will benefit from a larger expiry base and low prior year comparable. Also, Azure, I believe, won a bunch of contracts as well with governments, okay? So as you can see, they say with continued shift to cloud, so businesses are still continuing to shift to cloud, and that's important, okay? They returned 10 billion to shareholders with 5.8 billion in repurchases and then 4.2 billion in dividends. And then operating expenses were 11.6 billion, up 5%. So they grew revenues in line with expenses, which is great. Tax rate's going to start to increase. Remember, this is another thing that people are not paying attention to. Once tax rates increase, earnings are also going to erode. That's going to put a downward pressure on the market, okay, in terms of earnings and retained earnings, right? If you have to pay higher amounts of money to Uncle Sam, then businesses are probably going to choose to return that money to shareholders. So it's going to be interesting because you might see bigger share buybacks. And that's going to create some serious instability right now. CapEx, and then cash flows up about 27% year over year. Free cash flow up 24%. That's beautiful. I'm still trying to understand why Microsoft was sold off, but I think it was just because of bad guidance, in my opinion. Okay, so quarterly, everything was in line and really, really well beat, a good beat in my opinion. This was something that I specifically liked seeing. Revenue grew 15% for specifically LinkedIn and Office 365, showing continued adoption and strong positioning for Office 365 products and LinkedIn. And yeah, look at LinkedIn revenue itself, right? LinkedIn revenue itself grew 25%, driven by strong advertising demand. How beautiful is that, right? Sessions grew 29% with record engagement. Really, really interesting, right? Okay, that's all we need to know for Microsoft here. Do you think dividends would go up along with share buybacks? Probably. I mean, it could. It depends on the company. It depends on whether it's a company that enjoys paying dividends. There are benefits of share buybacks versus issuing dividends. There are two ways to look at it. It really depends. Okay, and then you have Apple, right? And Apple reported is they don't do slides, and I really find this very frustrating. As a investor, I really wish they did slides, right? They only put this stupid, consolidated statement of operations, which is fine for people who are like me, who know how to read these. But if it's like, somebody who's not financially savvy, this is terrible. You're like a trillion-dollar company. You're telling me that you don't have a team to put together slides for investor relations? Come on, right? This is something that I don't appreciate. They could make slides like AWS, like Amazon, right? Even if it's simple, just like this, right? You can at least see how the company's performing. But they just put everything in one clump like this for you to read. Makes it very difficult. So you kind of have to look at these numbers now. So let's look. These two columns is what you want to look at specifically. You could look at these two columns too, but this is 6 months ended. This is 3 months. This is 6 months of the same comparison period. Typically, if you want a more dramatic comparison, it's this one. If you want a more like quarter over quarter comparison, it's this one. Okay. So we can see product sales very strong, increasing substantially, very strong. Services continue to increase, and we have spoken about this on the live stream multiple times, that services are an important part and segment of Apple's continued growth, right? Services are a part of the ecosystem that will continue to grow and generate, passive income for this business. And I think that over the years, Apple's really going to benefit from their service revenue more than anything. COGS also increased substantially, but then less than revenues, which is good, right? You can see the jump here was about 20 something billion, and then the COGS was increased by about 15 billion, right? You don't want COGS to be higher than your cost of attaining those revenues, right? So let's say, the cost of selling these products was about half, right? In if you talk about ratio, okay. Services also had increase in expenses, and then you have operating income, okay, blah blah blah. Net income positive at 23 billion, and yeah. And then you have all of this. Okay, so then you can see reported by segments. America, pretty good. Now, what I really want to highlight here is look at this. Chinese segment sales have gone through the roof, and even Europe have been pretty strong, okay? Japan and the rest of Asia Pacific doubled in sales this period, okay? So this is really, really important. So Apple is growing its presence overseas because of Apple Super. We spoke about this before about the Apple Super Cycle. A lot of people don't change phones until they absolutely have to, and so this Apple Super Cycle has really driven a lot of people to buy these products. Okay, if you talk about category sales, look at the jump in iPhone sales. Very big, substantial jump, and then Mac sales also very substantial jump, right? In fact, wearables didn't do that well this quarter, which is okay, right? You can't expect wearables to always do well. And iPad sales were actually still pretty strong as well, all right? So iPhone sales made up a majority of this quarter's purchases, which is what we spoke about. We've been talking about this for a heck of a long time, right? And it actually came true. Now, I'm only holding Apple shares, so I don't really have a crazy big ass position in there neither. I'm just holding them, but I am going to be selling my Apple shares pretty much by this coming week or so. I'm going to be exiting out of my Apple position, and I'll be holding that position in cash for when Apple comes back down a little bit further. Okay, I think I will be happy with exiting my Apple shares today, and then taking them at a lower price when I find it a bit more attractive. This price right now is non-attractive to me. Okay, and then you have the balance sheet right here, and statement of cash flows. I just wanted to go through the beat over here. This was important to go through. This balance sheet and statement of cash flows is a little bit more difficult to analyze, so let's not waste the time there. And let's move over to Facebook, which is something that we'll talk about. Okay, then we have Facebook with a insane beat. Okay. So, see, do you guys see what I mean? Amazon has slides. Microsoft has slides, right? You have different companies have slides. Apple just gives you this. Like, dude, come on. You could have put everything into slides. Like, what is your problem? You know what I mean? Like, why? Why did you not make slides? Maybe you don't have enough money? I'm just kidding. I'm just kidding. But do you guys feel my frustration? It's like, dude, come on. You have billions of dollars. You employ your team to make slides, man. Come on. You know, I'm a visual person. You know. Okay, then let's look at Facebook real quick. So Facebook DAUs, daily active users, up big time. And you can see this, right? More and more people use Facebook every single year, every single quarter. You can see that really nice gradual increase. This is a monopoly company. Remember this, okay? Monthly active users at 2.8 billion. Okay, beautiful. And then you have Facebook average revenue per user, and this was something that was wow to me, right? Look at the daily, look at the average revenue per user. Globally, right? If you think about it globally, worldwide, each Facebook user brings in about $9 to $10 worth of revenue, which is crazy. In the US alone, last quarter, it brought in $50 per user. $48 now, okay? That's how much of revenue you bring to Facebook, which is pretty insane. And then you have this, daily active people, monthly active people, revenue per person, right? And then you have revenues. So let's look at revenues real quick. So Facebook makes most of its money through advertising, as you can see, and then the rest of it through other things. You know, Q4 tends to be a good quarter for Facebook. As you can see, it tends to be the best quarter. But if you compare Q1 to Q1, look at that huge growth, right? We're looking at almost a double growth in revenue, all right? So Facebook's building significant cash flows here, $26 billion in revenues this quarter. And if you look at it by geography, obviously US and Canada brings in the cake. Next comes Europe, then Asia Pacific, and then the rest of the world, right? And then you have advertising revenue by geography. You have other revenue, percentage, expenses. And this is beautiful, right? This is the reason why Facebook is such a investable business is because of its expenses. You can see revenues going up, but expenses coming down, right? That is the beauty of Facebook stock. Okay, owning this business is really very beneficial for the long run because it is a monopoly in the social media space, and then it has such a low debt level. Okay, it has no debt almost. Okay, very little debt. And you can see that operating expenses are continuing to come in a downward trend, which means as it scales up, you know, its business generates more revenues, but at a lower cost basis, right? Cost of revenue is now 20%. It has been 20% for a while, right? Research and development, they continue to pour money to R&D. And then look at general and administrative. It has gone down significantly for the past 1 year or so. Even you know, marketing has gone down, so this is a good sign. Okay, income from operations, so operational income has been on a uptrend, looking nice, right? If you compare Q1 over Q1, for 3 years consecutively, went from 3,000 to 5,000 to now 3 billion to 5 billion to now 11 billion. Right, so they're doubling up almost every year in income from operations, And their margins, oh my goodness, look at these margins, beautiful margins, right? 43% margins on their operations, okay, which is beautiful, just beautiful. Effective tax rate was beautiful, 17%. Now, remember, as we get back into a Democrat-run government, we're not going to see tax rates like this again. We will be seeing tax rates closer to this, 30%, 40%. That's where we'll be seeing tax rates, okay? And then comes net income. So also beautiful if you look at it 3 years consecutively, 2 billion to 5 billion to 10 billion, which is really nice, right? So you see a doubling up of net income for 3 consecutive years. Very strong performance by Facebook, right? And then earning EPS, once again, 85 cents, $1.71, and $3.30, almost doubling up as well. CapEx remains high, as it should. I actually believe that they should, in fact, invest more in CapEx, and rightfully so. So this is good. I want to see them put more money into CapEx. As you can see, strong free cash flow generation across the board. Look at the comparison. 5 billion, 5 billion. Okay, Q2 2020 is where they had the least, but then I think there was something else that was playing a role over here. They had, very low operating expenses. They had a pretty bad beat there. And then look at them just rebound from there. Boom. In Q4 and in Q1 now, they're doing extremely well. FCF positive. Company has always been FCF positive and is doing extremely, extremely well. All the companies that we've gone through today have done extremely well. And they're all great companies to own for the long run, right? Microsoft is intact with its economic moat. Amazon, Apple, and Facebook, they're all great companies to own in the long run. Okay, so that kind of concludes my live stream for today. I hope this helped you out. Did this session help you guys out? I know we ran a little longer than usual, but did this help you out, guys? Can I get some feedback real quick? Me going through the earnings reports like this and kind of breaking it down for you guys, or kind of rationalizing it with you guys. Did it help you out? Yes, always. Okay. Gotcha. Always helps. Okay, great. Apple likes to do things differently for better or worse. That sounds like it. OE sounds like my Apple puts for next month may pay. Yep, I would definitely hold Apple puts. It definitely does make sense. We've been failing to break out of this region for a heck of a long time too. I think Steve Jobs hated slides. Oh damn, really? Definitely was really helpful. Great to get on earnings reports. Okay, awesome. Well, thanks for your feedback. I appreciate it. Guys, we didn't pick a ticker of the week. So let's do that real quick. What do you guys want to see next week? What do we do? Let's do something that has a forward-looking sentiment, right? Perhaps something from financials, something from energy, something from Chinese tech. Choose between those 3 sectors, because I think those are going to be the sectors that will do well. So I believe we were thinking of doing BP. Yeah, that was one of them that we were thinking of doing. Or we could do a bank. XOM. We've done XOM before. How Amazon going to move today? Any thoughts? That's like, let me consult my crystal ball. I mean, you can't tell. But if the market slides, expect Amazon to come down and close this gap. That's for sure. Market looks bearish right now. Just FYI. Nasdaq's approaching a death cross on the 1 hour, just so you guys know. Bank of America, that's actually a decent one, I guess. We could do Bank of America. Okay, that's a choice. BP is also a good one. Tencent, that's another great one. Wow, we're spoiled for choice here. I don't think we've ever done Tencent before, have we? I don't think so. Let me see. Tencent. We've done JD. We've done PDD. Did we do Tencent before? Baidu, we've done Amazon, Ichi, we've done Shopify. Next era. I don't think we've done 10 cent. Alibaba. Yeah, I don't think we've done 10 cent. You guys want to do 10 cent? 10 cent's a good one, actually. 10 cent is a very good company within China. Jinko Solar. Okay. All right, let's have a vote. Let's have a vote, guys. There's 20 some of you. Let's choose between BP, Bank of America, and 10 cent. Bank of America, 10 cent, or BP. Go for it now. Vote, vote, vote. We have one vote for Bank of America. BP, okay. Come on. Can everybody take a second out of your day and just vote for one ticker? 10 cent, 10 cent, 2 for 10 cent. Two for Bank of America, 2 for 10 cent. If it comes down to a tiebreaker, then I'm going to vote. JKS. Can you choose between 10 cent, BP, or Bank of America? Michael? This company recently broke out too. Not enough votes. Not enough people. I see 24 people here, but only like 5 of you wrote something. Okay then, I guess I'm going to be the one to pick since you guys don't want to vote. I think we're going to go with 10 cent. I think we should go with exploring... we should go with exploring Chinese tech here. I think I mean I want to do a valuation on this business too, and I want to know how much it's worth. So I think we're gonna go with 10 cent. Alrighty, great. We're gonna go ahead and do that. Thank you guys so much for voting, and I guess, yeah, this is goodbye for the weekend. Have a great one, guys. Take care, and I will see you guys on Monday. We'll do 10 cent as a ticker of the week. We don't. It's Monday. It's not a holiday, is it? It's Labor Day here in Singapore. Is it Labor Day anywhere else? I don't know. Let's see. Stock market holidays. Oh, it is. Wait. No. Wait. Hold up. 2021. Oh, the next one is in May, I guess. Memorial Day, right? May 31st, I think. That will be a Monday. Yeah, I think so. Okay, so the market's open on Monday. Okay, great. All right, perfect. So I'll see you guys on Monday. Have a great weekend, guys. Take care, and we'll do 10 cent on Monday. Alrighty, bye bye. Take care.